This module provides a detailed understanding of how property taxation and special assessments work in Arizona real estate and how these financial elements impact buyers, sellers, and licensees. Mastery of these concepts is essential for demonstrating reasonable skill and care and ensuring clients are accurately informed of their financial responsibilities during real estate transactions. Arizona real estate taxes are levied by counties and municipalities under the authority of ARS Title 42, which governs property valuation, assessment, and collection. These taxes fund essential public services such as schools, roads, fire protection, and infrastructure. Importantly, property taxes in Arizona are paid in arrears, meaning that taxes assessed for a given year are actually billed and due in the following year. Payments are divided into 2 installments. The first half due on October 1st, delinquent November 1, and the second half due on March 1st, delinquent May 1. Understanding this payment cycle is critical for accurately advising clients and calculating proration at closing. Arizona's property tax system classifies property based on its use, and each classification carries a distinct assessment ratio. Commercial and industrial properties, Class 1, are assessed at the highest rate, approximately 18% of their full cash value, because these properties produce income and benefit most from local infrastructure. Owner-occupied residential properties, Class 3, and non-owner-occupied residential properties, Class 4, are assessed at around 10%, while agricultural properties, Class 2, enjoy a lower rate of 15% when they qualify under state agricultural use provisions. This classification system ensures a fair distribution of tax responsibilities across different property types, reflecting Arizona's principle of taxation based on property use. The module also explains how to calculate tax prorations on a settlement statement based on the close of escrow date. Since taxes are paid in arrears, sellers must pay their share of the year's taxes for the period they owned the property up to, and including the closing date. The standard calculation formula is annual tax 365, X number of days owned by seller, seller's tax obligation. For instance, if the annual tax is for $380 and escrow closes on June 30th, the seller is responsible for $2,172.33 for their ownership period, which appears as a debit to the seller and credit to the buyer. If taxes are prepaid, the buyer reimburses the seller for the buyer's ownership portion. Real estate professionals must verify these figures for accuracy to avoid errors and disputes, fulfilling their obligation under AAC R4 28-1101H to ensure financial correctness and clarity. Lastly, the module introduces Community Facility Districts, CFDs, special taxing districts authorized under ARS Title 48, Chapter 4, Article 6. CFDs finance infrastructure improvements within a specific development, such as roads, sewer systems, water lines, and parks. Homeowners within a CFD pay additional assessments on their property tax bills to repay bonds issued for these improvements. Licensees must disclose the existence of any CFD to prospective buyers, as required by ARS, Paragraph 32-2183, since these assessments materially affect ownership costs. CFDs differ from HOAs in that they are public taxing entities rather than private associations. Key takeaways: property taxes in Arizona are paid in arrears, with 2 annual installments. Commercial and industrial properties are assessed at the highest rate, 18%, while residential and agricultural properties are taxed at lower rates. Accurate tax prorations based on the close of escrow date are critical to fair and compliant closings. Community Facility Districts, CFDs, impose additional assessments for infrastructure projects and must be disclosed to buyers as part of their ownership costs. Supporting sources in key case law ARS. Title 42, Property Taxation, Valuation, and Payment Schedule. ARS Title 48, Chapter 4, Article 6, Paragraph 48701 to R 48799, governs creation and operation of CFDs. AAC, R4281101H. Duty to ensure accurate financial communication. Maricopa County Assessor IV's State of Arizona, 2015. Clarified authority over property classifications. Town of Queen Creek CFD v. Ador, 2017. Confirmed CFDs as public taxing mechanisms. In summary, understanding Arizona's property taxation system, including classifications, assessment rates, proration methods, and CFD obligations, is vital for all real estate professionals. It ensures clients are informed about ongoing costs, reduces the risk of post-closing disputes, and reflects a licensee's professionalism and compliance with Arizona's fiduciary and disclosure standards.